If you're having trouble finding deals with strong cash flow, you're not alone. With housing prices going through the roof, it's getting harder and harder to find good deals across the US. But they do exist. In this video, I'm going to show you 6 markets that are cash flow unicorns. These are the top cities that reliably produce deals with excellent cash flow. What's going on, everyone? I'm Dave Meyer. I'm the Vice President of Data and Analytics here at BiggerPockets. And if you're looking for tips on the best places to invest or want to learn more about the basic economics of real estate investing, make sure to subscribe to this channel to catch all of my videos. All right, let's get into this. First thing we're gonna do is we're gonna take a step back and talk about why cash flow is so coveted. There are generally 4 ways to make money from real estate. That is appreciation, amortization, tax advantages, and of course, cash flow. Of all these methods, most investors prioritize cash flow the highest. It's predictable, you can easily reinvest your profits, and it's the best way in the world to pursue early retirement and financial freedom. The problem is cash flow is getting harder and harder to find. And the reason boils down to a very simple fact. This manifests itself in 2 ways mostly. Rent growth has outpaced income growth for years, and that cannot continue. This is putting strain on renters all over the country and is not a good situation for anyone. Without the income of renters rising, the amount of rent can grow is severely limited. Secondly, rent growth is not keeping pace with property appreciation in most markets. It is getting more expensive to buy a house, but the rent you can generate from that house is not growing at the same rate. Since 2005, actually, housing prices have gone up 35%, while rent has only grown 21%. These factors simply make it harder for investors to find places that have cash flow. When I first got started investing back in 2010, it was still the end of the financial crisis and finding cash flow was easy. When I would analyze a deal, every single one would cash flow. It was just a matter of which one cash flowed the most. You could be a complete novice, like I was at the time, and still make a deal work. Home prices had decreased so much during the financial crisis that you could get places with strong rents for less than the properties were worth. Investing in those times were just a lot simpler. It was way easier. Now, I have to analyze dozens of deals to find something in Denver that will cash flow. Despite what people say, there is still cash flow deals in most markets, but they are super hard to find. So to save you all your precious time, I looked through some data from BP Insights to determine which cities on a whole still offer great cash flow for investors. In order to evaluate a market's potential, I like to use a metric known as the rent to price ratio, or RTP. RTP is pretty simple. You can just take the median rent in a city and divide it by the median property price, and there you have it. You have RTP. RTP is super helpful because it's a proxy for cash flow. In the equation, you have rent, and using the price of the home, you can roughly estimate big expenses like financing, insurance, and taxes. And that's why RTP is so useful. You just need 2 inputs to get reasonable understanding of cash flow potential. Generally, I think an RTP of 0.5% or above is worth considering, and anything above 1% is awesome. All right, everyone with me? Cash flow is getting harder and harder to find because expenses are growing faster than income potential in most American cities, but not all. Right now, I'm going to share with you my top 6 cash flow unicorns for rental property investing by using the rent to price ratio. Number 1 on our list is Brownsville, Texas. Brownsville is one of the smaller cities on our list with just under 200,000 residents. Like many cities in Texas though, the city is growing on average 0.4% per year since 2010. As a real estate investor, you like to see population growth, so this is really good. The RTP in Brownsville is just over 1 at 1.02%, which is excellent. But the downside is property appreciation is negative at negative 1.6% on average in the last decade. That's going to be a trend with a lot of properties on this list. However, that's just over the last 10 years. Recent data suggests Brownsville is starting to grow in terms of housing prices and fast. Brownsville also sports the highest income growth of residents since 2010 at 3% per year. This type of macroeconomic improvement bodes well for a market's future performance. Number 2 on our list is Memphis, Tennessee. Memphis has an RTP of 1.04 and has the best appreciation rate for any city on this list. Don't get too excited, appreciation was still negative, but only negative 0.7% since 2010. Keep in mind, I am showing 10-year appreciation to provide a lot of context, but as many of us know, Memphis has been a star for appreciation in recent years. Memphis does offer strong cash flow potential without a doubt. If you purchase a home at the median sale price of $103,000 and put 20% down and paid a property management company, we'd expect you to be able to generate cash flow in year 1 of $4K. A lot of that is due to Memphis's low tax rate at just 1.6%, by far the lowest on our list. All told, Memphis could generate a roughly 20% cash-on-cash return. Number 3 on our list is Kansas City, Missouri. Kansas City has an RTP of 1.04, and while property prices have been declining on average since 2010, the city does continue to see very strong rent growth with 6.6% average rent growth rates. Another bright spot for Kansas City is its population growth, a key indicator I like to look at for future performance. Since 2010, KC has averaged 0.7% growth per year, and although that might not sound like a lot, many other cities on this list have actually seen population decline. So this is a really good positive indicator for Kansas City's future rent growth and appreciation. Number 4 on our list is Baltimore, Maryland. Baltimore is a market that tends to produce a lot of cash flow with an RTP of 1.25%. The city does have negative price appreciation at negative 3.5% since 2010, but just like with many other cities on this list, the last year has seen the trend reverse. Sale prices have risen more than 30% year over year. That is huge. But take that with a grain of salt given COVID and everything that has caused. Another positive data point for Baltimore is the city has seen income growth average 2.7% per year since 2010, one of the highest marks on our list and a good indicator for continued rent appreciation. Number 5 on our list is Gary, Indiana. Gary is another perpetual winner in terms of cash flowing markets. This city on the shores of Lake Michigan has an RTP of 1.89%, which is huge. This is coupled with a home price compound annual growth rate of negative 5% since 2010, meaning homes have been on average losing value over the last few years. That said, Gary is an intriguing market for cash flow investors. If you were to invest in the median home in Gary and put 20% down, you'd need about $9K for your down payment. But it would produce about between $4,000 and $5,000 in cash flow in year 1. And that is an amazing cash-on-cash return. Last on our list is Detroit, Michigan. Detroit is the king of cash flow when it comes to broad market level analysis. The Motor City not only meets the 1% rule, but is actually above 2% for RTP. Far and away the best for any city in the United States. For years, the rub against Detroit has been home prices, and that is fair. Since 2010, home prices in Detroit have averaged a decline of 4.7% annually, but things seem to be turning around. Since March of 2020, the median sale price in Detroit has gone up a staggering 37%. This may be artificially high due to all the COVID-induced wonkiness in the housing market, so keep that in mind. But one thing remains true. If you're a pure cash flow investor, Detroit cannot be beat. So if you're looking to maximize cash flow right now, make sure to check out these reliable markets. And if you want to find an agent in one of these markets or learn more about investing out of state, make sure to visit BiggerPockets.com, where you can connect with investor-friendly agents from across the United States and learn everything there is to know about real estate investing. For BiggerPockets, I'm Dave Meyer, and I'll see you all next time.